We'll just go back and we'll start with the beginning of the day, and we'll go from a higher time frame, and then we'll go look at stuff on a lower time frame, and then we'll use all the different tools as we approach certain levels and see how everything played out, and then just kind of like talk through price action and go over any questions that you guys might have. Um, so let's just go back to this. Let me throw the other days back on. Here we go. These were mostly the levels that I had plotted. As we're looking at higher time frame structure, um, the last live I did, we kind of talked about how um, if something's going to happen, typically the market will give it three chances, and if it's not reactive off that third chance, then we can almost negate that area is going to be a pivot area. And so we talked about the daily fair value gap. We hit it three times, and there was no reaction or no displacement down to fill in this large volume imbalance, which was the new week opening gap. It's pinned in my channel, Jay. Should have all my, it's all the indicators that I use. All right, and so then Friday, we kind of get this close into the fair value gap, and it closes above this consolidated area after running liquidity down here. All right. And so Monday, let's see if I can bring up. I had a drawing for Monday where I wanted to see basically price come down into a previous Monday high and then target this, and that's what we got played out for Monday. And so we'll just look at like levels around these Monday levels. And again, this isn't just like slap, slap longs at any level. Just because they're previous Monday levels, like we'll take a look at on the 1 minute, this open, Monday open, price initially really dove through that. Um, but we're looking at price action around these levels, and this is the time factor of that I use for daily, where we should see price start to use the same levels on the daily for the uh, same daily candle. Okay, and then we see that right here, previous Monday high, and then we target this previous Monday high. All right, so that was the setup for Monday on the higher time frame, what I was looking at. And if we just bounce to the 4 hour, okay, some of the things I'm looking at on the 4 hour, and we talked about the new week opening gap yesterday on the live I did. And one of the things I was talking about was when we have a new week opening gap and we pretty much gap up and we take out a previous day high, okay? What I'm going to be looking for is I'm going to be looking for confirmation that price is unwilling to go higher than the initial high set and looking for a gap fill and a retracement to some sort of imbalance, okay? And we've talked about how in price action, after a high is taken, we are looking for an imbalance to be targeted next, and vice versa. Once a imbalance is balanced, then we're looking for some sort of higher low to be targeted after that. Okay, and that's kind of a basic sequence that we see in price action over and over, and it's fractal, right? And so we can go back and look at examples where we had this major low taken, this whole area is an imbalance. Okay, we have this big SIBI up here and a few along the way. And then what do we get after the low is taken? Price rebalances itself. Okay, so we can see that on different time frames. All right. If we break down kind of the 4-hour today, we have our 6 p.m. open. Okay, it runs down and nothing too notable other than we're looking at this previous Monday high. Okay, so nothing really like that just stands out as far as is this 6 o'clock candle going to target another 6 o'clock point of interest? Um, sure, we could say like here's a 6 a.m. open, here's a large wick, and maybe if we like took this 6 p.m. wick and drew it out in time, we see that it tags 50% of it. But again, it's not very clear, right? Okay. I'm not going to sit here and tell you that like, oh yeah, I'm constantly seeing all these happen in real time because when we get 4-hour consolidation or daily consolidation where the 4-hour overlaps, it can be convoluted in that way. Yeah, we'll get to Tuesday at the end. We're going to review Monday and then we'll get to Tuesday. Okay. Um, rest of these levels, we have this 10 p.m. candle, and we almost get to this previous 10 p.m. high. Gets pretty darn close. Um, and that's another thing too. That's kind of a good sign where if you if we get like extremely close to it, like if we take this high at 21.25 and the low is 26, if we get within 5 to 10 points and it rejects that area, it's a good chance that that is going to make a nice move away from that area. Okay, which it does. This candle, do we really get anything that matches back to it? This is kind of creating an order block. All right. But then I want to take your attention to the 6 a.m. candle, and we get a nice run below the 6 p.m. low. Okay. And then here's a 6 a.m. candle, and look at that. All right. So remember, opening price is very sensitive. I'm sorry, this open, not low right here. Okay. And this is when the 4-hour actually comes into play where you can find something very easily in real time. Okay. We have a previous high, and this previous high on the 4-hour, we would like to have it show support. Okay. So as this candle comes down and we're looking at this as like a breaker or a mitigation block, all right, here's the opening price. We mark that out and we get a fellow 6 a.m. candle that just dives into the opening price and rejects it heavily. Okay. So these ones, not so clear. This candle, really nice. All right, and then we get the continuation, and basically we get up and we kind of start hitting where all these uh, equals equal highs are at with candle bodies. And we don't quite hit the 10 a.m. open. Okay, again we get pretty dang close, but we don't quite get there. All right, so that's 4-hour levels and looking at which ones played out nicely um, in conjunction with today's price action. All right. So we'll just go and take a look at price action on the lower time frame. All right. Okay, we talked about this. Previous day high was ran, it gapped above it. Okay, Monday mean threshold level, we get this huge reaction off of it where it wicks up into it and then completely wicks down and then drives down with the following candles. All right. So if we just mark this out as a bearish order block or something where we can see price kind of start holding that 50%, which it does, we get a really nice movement for gap fill, okay, which is a really nice play. And as we start looking at price and how it moves around the Monday levels, this is on the 1 minute chart. Okay, we see how this candle like completely just dives through this Monday high. Okay, it's not concerned with this one right here, so it just really dives through it, kind of a larger candle, wicks it, and then we get continued sell off. Monday open is where we get our first kind of reactive nature and price around this level. And you can see that as it taps it, we get a reaction off of it. And kind of every time it taps it, it's kind of just holding above it. But this is what I would like to note in this area of price action. This is why we don't just slap levels, is that this range that was created this kind of price action does not look like this kind of price action. Okay, we have this range, all this imbalance up here, and price is just kind of slowly moving up. And once it hits 50% of the range, if we look at the candle body that touches 50%, and we look at what happens afterwards, we get a close below that candle, and then price continues lower. Okay, so if you took a long off of this, we need to be mindful of price action. And if 50% of a range is holding, because remember, we talked about before, when price is looking to achieve a certain objective, it's going to tag 50% of the range and keep going. Okay, and we see that right here. Okay, measured out with the GAN box, and then continues down to the Monday high. Asia opens right here, 50% of the range. We dive down, and now look what kind of reaction we get at the previous Monday high. Okay, we get price dive through there, and immediately we get a close above like 7 candles. Okay, we'll take our 2 candles that kind of start this little movement down below Monday high before the nice reaction, and we get a rebalance. We see that price taps the Monday high one more time and then continues higher. Okay, so entries right here in this order block, stop at the low. Yeah, so in my channel, Steven, and on my YouTube, so in the channel in the Discord, I have a ton of examples. On my YouTube, I have a ton of videos. Yeah. And then I'm gonna try to just do more reviews with this time, with all the time stuff, because I think it takes a little bit to kind of understand it and be able to use it to your advantage. So Cozy, she kind of adopted some of this stuff into her trading style. And again, these are just levels. This you can still keep your trading style. These are just levels to help guide you where the daily candle could possibly go, right? And so if you know that it's Monday and we give a nice rejection off here and you get a long in here, there's possibilities for you to actually capture the full daily candle in a trade. And you can see that price never revisits this area. So then let's go ahead and put up our quarterlies. Okay. So now we're looking at, we have price hits this previous Monday high. We're in a Q3 reversal. We get a really nice reaction off of it. We get a rebalance into this order block, and we get this reversal out of there. So we have a lot of confluence with these levels, with the timed reversal trades that are in JD's mentorship, all together in one area. So that should give you a lot of confidence when taking these trades. Okay. All right, we get a price that really moves quickly out of this area. Um, I got in long right here. I was actually cooking dinner for my teenage daughters, so I missed the entry right here. I think Cozy got that. Here's another thing that I talked about too, is that when we see highs, okay, and we see price move around the high, a good indicator of price like continuing away from that high is if they put an order block in right at that high. Okay, and this is what I like to call like an inline order block. Like basically a down close candle where price is going to close through that candle and continue higher. And maybe it taps it again, maybe it doesn't. All right. And so this is where I began my long for the day. And you see how we drive through these other levels again. Okay. Where this kind of messed around on this Monday open level, we just drive through it. Same thing right here. Candles drive through it, this Monday high. Okay. We're not showing any signs of rejection at these Monday levels. And then this Monday high now starts holding price above it. Okay, and if we just go back to the 4-hour real quick, I wanted to see this close down here more because when we gapped up, this is a volume imbalance, and I use the 4-hour for like I want to see volume imbalances covered both sides, right? We got a lot of wick in here, but I was hoping to see this actually cover and close right here before this opened, the 10 p.m. candle, so that this would be the down close candle in this volume imbalance, and then this would be the up close candle. Kind of came up here to almost like 50% of the level. All right, so what that tells me is there's still a volume imbalance here because we don't have candle bodies through this area. When price will go back to here, who's to say, but that's why I wanted to see this close down here. Okay, but it didn't do that. Uh, close over the body. And it has to be like with meaning. So like this body is almost twice as big as this body, where it's like really showing a willingness to close above. Everyone following along so far? Good. Okay. Let's get rid of this. All right. Monday high holds price above it. We got that. We get the slow grind up. We're back to the Monday mean threshold area, okay, which was our first rejection point. And now we have price holding above that. And we run the previous high back here. Okay, and then we run the Asia high. And we start getting into the London range, okay? And we'll talk about these ATR levels as well. And so now, what do we get as far as this the Asia range and we're getting into London overnight, well, London taps 50% of the Asian range, which is this line right here, and then rejects from there. Okay, so that's a good sign for a bullish continuation. When we get Asia setting the low, we run the high of it, we go down to 50% of the Asia range and then reject from there during London. Okay, we've talked about this before where we have price moving on both sides of the levels, kind of consolidating around it. Now we're looking for other areas to trade, okay, because we don't want to get caught on the wrong side because price is consolidating around this level, okay, and this is the middle, okay, the mean threshold is the middle of the candle body, so this is the middle of a previous Monday candle body, so it's a good place for price to consolidate. And when we kind of tighten price up like this, what we get is an area of consolidation, we get the manipulation lower, and then we get the distribution. Okay. Price slowly starts working its way up. Now we get a nice drive through this, and now price is now starting to hold the structure around this above it. Okay. Nice drive down into a fair value gap. Okay, so that fair value gap 50% holds. Let's lighten this up just a little bit. Let's make it blue. There we go. Okay, and then price drives above that. So now I'm looking at this candle right here. Candle bodies hold 50%. Okay, so if we're using this as an order block, another thing too, like order blocks along the way, is where I want to see price drive into an area of inefficiency. Okay, so a fair value gap, and then I want to see price close above that candle. It can be one candle down, one candle up. It could be one candle down. It could be these like these three candles up. But then any retest, we want to see 50% hold, right? So then we get price moves up. We're getting close to open. And right here, 9:30 open. I put in the group chat, I said, as soon as New York AM opens, I want to see price rip up to 253. Okay. And exactly when it opened, we rip up to 253. Not all the way up there, but we get a very expansive candle that is showing that price is ready to now move higher. Okay. We have Monday close level. As we're watching this live, okay, as we're watching this live and price is approaching this Monday close, notice it's always going to give us an initial reaction off of it. So this first candle that touches it, and then wicks away. Almost hinting, hi Anya, almost hinting at like it wanting to get people to say, oh, let me try to short right here because maybe it's going to fill in this balance. However, we have this kind of first presented fair value gap. I would have accepted price to come down and maybe touch this high. It didn't, and this was a breakaway gap. Okay, that's what it ended up being. And then now look at the candle bodies at this Monday close level. The next candle drives through and closes above. And now as the candles that close above, they're wicking this level and they're holding price. Okay. We get the next drive up and we get a rebalance, right? Here's the down close candle open, and we get down close candles that rebalance this area. That's all that was. And we get a wick into this Monday close level again. And then what do we get after that? This candle closes above this candle after this candle rebalanced. Okay. If you're late to the game, here's a aggressive approach where this area gets rebalanced and you're going long again right here. This is a more conservative approach. As this candle completes the balance, right? So remember, now we're looking at on the 1 minute time frame. What happened? These candles ran this high. What happened after we ran a high? We rebalance. What happened after we rebalance? We target the high. Okay? This is like kind of bread and butter what price typically tends to do. Some days it's cleaner than others. So you get a couple opportunities to where price will tap into this candle that finished the balance and it's using it like an order block. Okay, because it completed the objective. The objective was to rebalance this area. All right, we have Monday high, and we get a couple of equal highs right here. And this is where I exited my trade for the day after price drove through it. And so that was my target for Monday levels. Again, initial reaction. Okay, but if I had this up here previously because I marked out this range because I want to see what does price do when it's reactive. Oh, actually, I had runners still. I'm sorry, my runners got taken out at this new day opening gap. So I left 5 runners on for that. Here's our range. We got our low, we got our high. What do we want to see if price is going to continue? We want to see price move down to 50%, hold, and continue. All right. So again, I'm measuring ranges because I want to see how price reacts around the 50% level. If we get a nice rejection and candle bodies are holding, then we can assume that we're going to get higher prices. Is everyone following along so far with how I'm going over price action and the candles and ranges, and any questions all making sense so far? Just trying to go through this like step by step. The more efficient you can become at actually reading price, it will help you develop like really good patience and entries. All right, so then we have price drive through the new day opening gap. We have another kind of ATR level right here, and now price is holding, and we get into this consolidated area. Okay. So what did London? Okay, what did London and New York AM do? Okay, here's London. We got the consolidation. Okay, then we expand out of there. All right. Okay, and then I told you that at 11:30 Eastern to 12 is when the London desk is closing for the day. Okay, this is the last half hour of London trading. All right, and we have this range. Okay, and we get into another consolidative area. Okay, which if we look at this piece of price action for the day, it makes sense, right? We get this move down, kind of rebalancing. We get below these equal lows, come back up, we consolidate, we get a nice AM expansion, which means the PM sesh is going to consolidate. Okay, so go back test when price is moving in a direction and it's trending. Okay, we just had a daily consolidation and we're starting to trend up. We're going to see a lot of that where we can either get trend through Asia and London, and then New York AM consolidates, and then we get the PM breakout, or we get something similar to this where we get trend, we get a little bit of manipulation through Asia, but it kind of stays within the same range through London. New York AM trends up, and then the PM consolidates, getting ready for the next day. All right. And then we can just see how price moves around the range of London closing and the New York PM. We have this level kind of holding up price, this ATR level. The low of the range gets ran, and then the high of the range gets ran. And it's kind of setting the tone for price to move around for the consolidation in the PM sesh. All right. And we've stayed in this range. All right. So let's go to a 5-minute, because I said I was going to talk about ATR levels. I talked about that. These are all tools that you can use as Confluence. I think a few people use something similar, and a few people use this as well. All right. And we can set these ATR levels for the day. Okay, so as soon as the day opens up, typically the mean is supposed to be, here, let me get rid of some of these lines. Sorry, it's a little convoluted. All right. Oh, here's that 6 a.m. open. Okay, let's see our start, 5-minute. Okay, 6 a.m. open today. Here's the 6 a.m. previous open. What does price do? It just rebalances this, finishes rebalancing this leg, right? Okay. And so when we're looking at this, we got a wick, now we have a candle body drive down, and then we have price 3 candles that drive up way above this candle. 6 a.m. price, 6 a.m. open for the 4-hour is holding up this today's 6 a.m. low. Okay, so again, price reacts the same way around these 4-hour levels as it does with the daily levels. All right. And does it give us an entry? It gives us a very one entry. That's it. So if we order block this and say this is an order block because it met the objective of rebalancing this leg and price drove away from that and it tapped this 6 a.m. level, we get this candle that gives us one entry in here. This doesn't quite make it down in there. All right, but we do have an inverse fair value gap right here. And we do have some secondary chances right here where this leg drives down. And if we measure that, okay, we don't even get the 50% retracement. So price is really in a hurry. But we do get this leg down, this leg up. If we use this as like a propulsion block, I think we were just talking about that yesterday. Let's see, once a previous 4-hour blue, blue, green, green, red, red level is tested, do you remove it from the chart? Yeah, pretty much at the end of the day, I remove it because I want to start I always want to start fresh, Parves, and see where price is at in the whole large cycle of things. And that way I don't have a million lines all over my chart too, because I like my charts to be pretty clean. If we revisit this area again around the same time frame, then I might throw that back up. But once kind of this, like we had the 6 a.m. candle and it tags this 6 a.m. open, that's pretty much what I have use for this level. It's like, cool, it rejected that level. It showed me. Yeah, exactly. I want to know the levels, but I don't want to have like a million lines all over my chart. Yeah, so that's why I created the indicators to color code the candles so it draws your attention to the same time frame on those levels. So the daily, we're looking at the same day. The 4 hour, we're looking at the same sets of times, right? 6 p.m., 6 a.m., 10 p.m., 10 a.m., 2 p.m., 2 a.m. We talked about propulsion blocks yesterday. So order block, this candle dives into it. We don't get the 50% retracement, but we get this set of down close candles, and then we get one massive candle just drive up above it. And then in this, which is also a fair value gap in here, we get, remember I told you market loves threes? How many times did this get wicked? Three, and then what it do? Boom. Retrace, boom. All right. So, all right, back to the ATR levels. Okay. So ATR levels, average true range. This also helps me where I can see price kind of maneuver around these levels. All right. And so where price is supposed to open is it should open where the last candle closed the previous day. Okay. And this is basically like the mean for the day. And we can either get a bullish day and start targeting these levels, or we could get a bearish day and start targeting the bearish levels. Above and below the mean of the ATR levels, we have a bullish trigger and we have a bearish trigger. Okay. Sometimes, like Friday, we have price kind of maneuver through both sides of these ATR levels. Here's the mean, it opens up. Sometimes I'll measure the half because it likes to go up to halfway between. Like here's the bullish trigger, but it wants to target uh, lower objectives first. So it'll reject at 50% between like the mean and the bullish trigger, which we got right here. Okay, so then I'm entering short. Order block, couple entries, short. We reach the bearish trigger and it drives through, fails to reclaim it, and then we almost get a full -1 ATR move. Okay, this purple is a -1, and the purple up here would be a +1. And all these other ATR levels are just based off of fibs. Okay, fib levels for what the average true range of each day should be. All right. And so here we get the gap fill. We can't get down to the bearish ATR level. We get immediate drive up through the mean level. Price holds it. Price holds it. Initial rejection at the bullish. Gets up to the bullish. Back down to this area we talked about and then drives through. And we almost get a +1 ATR day. But this is a pretty good level. I think this is like the gold is the 618 level of, and this is like 0.79, and that's +1. Okay, so a nice movement off the mean through the bullish. And again, these are just levels to kind of guide us. So on days like this, when we have price drive down or manipulate down, and we almost get a -1 move, then what I can say is the probability of us really driving lower isn't as good as the probability of us kind of moving back up away from this area because we've already achieved a target. And it was in this massive new week opening gap. And so it made sense to take longs right here on the Friday. Um, we can also use this for the week. Okay, multi-day is a week long. And so now it gives us like average weekly ranges. And we can kind of see where price moves for the week. Okay, so for this consolidated week, we had this massive gap up because this is where it closed. This was the mean, and we gapped up above the bullish trigger, and we never closed below the bullish trigger. So even though we were in this major like daily consolidative area for the week, look what happens every time we hit the +1 ATR level. We get up there, we reject. We drive up there again, we reject. Okay, we drive above it again, and then we reject, almost coming back down to the bullish trigger level. And then we come back up, and what do? We close above the +1 to end the week. Settings for my ATR levels. So this is just stuff you can look at and backtest. Again, um, if you have a system that's working well for you, don't just start adding a bunch of stuff in. Um, I like to call that like the shiny object syndrome. And because there's a million ways to trade out there, there's literally a million different ways, and many people are successful with many different ways. Okay, there's no one way is best. So if you have something that works for you and you feel like you could use some of this to aid you, cool. If you feel like, I like my system, I don't really need this, but this is cool, just listening in, that's totally fine too. This isn't, these aren't meant to like say, hey, this is how you guys need to trade. Because I don't believe that. I have friends that, like my friend Sadie, he trades EMAs and ATR levels. And he doesn't even trade futures. He trades SPX options with that. And he's super successful. These are my settings for that. All right. Okay, so that's overview of the daily 4-hour ATR. Are there any questions on price action today? Anything else anyone wants to ask or go over? I feel we hit everything pretty well. Oh, okay. So that's another ATR level. Okay. So let's go, if I go to the weekly and I go to ATR levels and I go to, so day, week, swing is month, position is quarterly. Okay, so we started a new quarter with October. All right. And I went over this in yesterday's live. Okay, here's quarterlies. All right. And you can see how different quarterlies act with the quarterly levels. Okay. So we're kind of like all the way back here January. We've had price kind of getting up. We're kind of in this consolidation area. You can see price initially in this quarter, it tags the bullish and rejects. As we come up, price moves back down. We tag it, we reject. Now we really drive up, taking out this high, but what do? We get immediately closed below the bullish. This next week taps the bullish, drives through the mean, shows initial reaction off the bearish. Okay, previous swing low, we tap that, and this week drives through, and we get, you actually have to throw the extensions on because it's almost like a -2 ATR move, but we definitely get the -1 and then massive down here. Okay. And here's the next quarter. And you can see how price reacts around these levels. Once we like close above the bullish, we stay closed above the bullish. We don't even touch the bearish here. We stay right at the mean, and we're just kind of bouncing between bullish and the mean, and then we finish up at like the 6.8 quarterly. So here's the mean. That Friday, that week, puts us down here at the bearish, and what do? The initial reaction off the bearish is a massive gap up, and then the week closes green above this week, right? So then I want to see this get tapped because it's like an order block because we just filled this fair value gap and rejected. And I have this as marked out as the quarterly long trigger. Okay. So I'd like to see us close above this long. I'd like to see us dip back down and tap this previous week high and continue and start looking at some of these quarterly ATR levels up here. Let's see, current time-based system, which would be daily lows for tomorrow for our, okay, let's go look at tomorrow. Anyway, so these ATR levels, you can use them for a multitude of things. Monthly, see how the month's trending. Okay, we can see how the month is trending so far. Go below the bearish, tag this first ATR level, break above the bearish, tap it higher. Now we closed above the bullish monthly level so far. All right. Dun, dun, dun. Let's go back here. Let's go to the daily. Okay. As we start entering all-time highs, the daily levels become less and less. Okay. These work really nicely in areas where we have consolidation, okay, or we have retracements. Once we start breaking into all-time highs, there's nothing for us to look at back to the left, right? So really, as we start moving above here, the daily levels, I'm not going to have much to go off of, which is fine. We want to be able to use other tools as well. You know, so if we take this low, if we take the low and this high, and now we've had price keep moving into this discount area. Okay, so Friday created the low, we take Monday's high. Look at how price reacted around this fib. Okay. We keep getting all these rejections in the discount area, and we keep hitting the 618 level and rejecting heavily. And then we finally close above Monday high. So look at these things as well. When a daily level sets a high and we fail to close above it, that means price isn't ready to break out yet. Okay, now we finally closed above it, tapped the previous Monday high, and we still haven't closed above Friday high. Okay, but we've closed in this area and we've balanced this upper area. So if we fib this low to high and price is holding, is coming down into this OTE, okay, we can start marking some of these fib levels. So the first one is the 0.5 and the 618, which lines up with the quarterly. Okay, here's our Tuesday. So for Tuesday, I'm going to take this Tuesday high, I'm going to mark it out. All right. Monday close. Let's throw this in Monday. And let's start getting rid of these from Monday close, trend line, get rid of these. Sorry, I got to clean this up. All right. Monday close into Monday levels. Lock it, hide it. Okay. This is Tuesday high. We'll label it. And this is how I keep everything clean. Okay. And we'll move this into Tuesday levels. Lock it, we can hide it. See, so all my Tuesday levels are down here. I'm hoping that we are breaking out of this area and we're not going to just rebalance, manipulate, and drive lower. But again, we have to see. Okay, we have to see how price reacts. So up close, down close, up close, down close. So here's even a Tuesday open right here. So we'll mark that out as well. Kind of want to see this be like a breakaway gap. And I'd like to see just this Tuesday high, like price retrace to Tuesday high and then continue higher. We're not just going to slap longs at that Tuesday high. We got to watch price action around it. Okay. Get that in there. All right. So really, I'm just going to start with this candle, okay? Because I want to, our weekly is bullish. So I'd like to see continuation out of this area of consolidation. And so I'm just going to start with the levels that this candle has. Well, this is a big retracement. That's basically if we come back down into the previous week Tuesday, that's a full, like, that's Monday's full range. If we're bullish, I don't want to see that. If you miss all the best entries, yeah, you have to wait for retracements, and you have to see what's been balanced and what hasn't been balanced. And if you don't want all these extra lines, you can just open up your levels, and you can start like hiding ones that you're not going to use. Like if it's way too far away and you don't want to see all those levels on your line. So if I just want to show these, I can just open up my Tuesday folder. I can hide the rest and leave these open. So you can really keep everything very organized and very clean on your charts and toggle it on and off. Yeah, your object tree, make your labels, put stuff in it, and then that way you can always just toggle it on and off real quickly. So if you get back to a certain area and you have areas marked, So then what I would do for like Tuesday setup would be if I want to see price go higher and I want to see it go back into like this previous Tuesday high, then we just look at lower time frame areas within those levels. Okay, and that's exactly what we did for Monday. And there was equal lows right over here. And I drew something, I posted it in the chat where I said I want to see price manipulate below those equal lows into this high and then go up. Okay, and that's exactly what we got. Okay, so we'll throw the 5, whoops, that's daily. 5, we got 5-minute on there. I use the 5-minute chart because it just has a little bit better structure. Okay. And so then I would look at, well, what is around these levels? Okay. So there's a possibility that maybe we do get to the Tuesday Open. This was that first fair value gap that was presented at New York Open, and we never tapped it. Okay. So then I start just looking at ranges, and we look at what are the possibilities. And it might or it might not get there. But if I throw a fib on this leg of price, we have discount of this price leg. There lies the fair value gap. And this previous high, you got this 618 kind of lined up right there. Does that mean price is going to go there? No, not necessarily. We have to watch price action. We could just get manipulation. We could get a move below Tuesday high, where this is the after this accumulation, manipulate and continue higher. We might not get a full like discount retracement from this range. Okay, but I just want to have these places visualized on the 5 minutes so I can say, okay, what are my possibilities, right? We want to have possibilities for a few different things to happen. And then if you want, you can go through you can go through 4-hour stuff. Let's throw these ATR levels off. Okay. So for me, what I would love to see happen with Tuesday Open is I would love to see the 6 p.m. candle open up, manipulate down to this Tuesday high in this fair value gap, and target this 6 p.m. high. Okay. Because I like how these 6 o'clock equal highs are just hanging out right here, and I like how price didn't run it during this time, which tells me it's either going to be a 6 p.m. or a 6 a.m. candle that runs these highs, depending on how deep of a retracement they're going to go with this price leg. Okay, well, you can long the open, but you have to look at structure. Okay, and who knows? Let's give a bearish scenario for Tuesday, right? Because we talked about how there is. Now I'm gonna give you the long scenario too initially. Okay, so here we have a high. We didn't run the high. If we ran the high initially, right? 6 p.m. opens and it just starts going up. Okay, we run this 6 p.m. high. Is there a possibility that we get an inside day on Tuesday? Okay, follow me. Run the high. Tuesday rebalances the area quite a bit. All right, and then that's the order block placed at a previous high. And then Wednesday, we get continuation. Right? Because Wednesday right here, technically this Wednesday candle set the high of this range. Price did not close above the high of Wednesday. Okay, so this is the high of this piece of price action. Yes, we got a wick above it a couple times, but price failed to close above this Wednesday candle. Okay, so there's a possibility, and we want to keep our minds open to both things and watch price action. There's a possibility that Tuesday could be a down close candle. It could run the high. Okay, because we got looking at the 4-hour here. down close candle kind of rebalances, and then Wednesday we get continuation. That's an order block set at previous highs. And why do we get order blocks set at previous highs? Because there needs to be a way to get as many people off sides as possible. Okay. So if we run the high and Tuesday is a down close candle, how many options players do you think are going to be in short options? And then if we get a Wednesday continuation higher, when the market finally opens, guess where those uh, your short options are going to be? You're going to have a gap back up, and they're going to be cooked. Exactly. And so you massively pull liquidity from retail. So like think in terms of that. Like it's not just futures traders out there. There's options traders. There's all kinds of different ways of trading. So again, I want to think of both sides of the puzzle, right? I want to say this is my long scenario, which would be if we just get continuation and then Wednesday retest this previous Wednesday high, where we get Tuesday, we get a fair value gap, and then Wednesday comes in here and maybe fills that gap, tests the high and continues. There's that, or we get a Tuesday close, immediate rebalance after it runs a high, and then Wednesday continuation higher. Um, and then, like I said, I'm hoping that this isn't like accumulation. I'm hoping this isn't the manipulation, and then we drive lower because the weekly chart looks bullish. That makes sense. How I'm like giving myself both sides of the equation. That way we're not like marrying just one bias. Because if we just think of one bias, our minds tend to just stick to that, and then we're like forcing our trades into that one bias instead of being open to the idea of what is price action telling me or what is it showing me. Have a good one, Parvez. All right, any other questions? Everyone everyone good with what we went over? So the quarterlies, I usually tend to just look for the Q3 reversals. So when they line up, so I'd have to go back down to the 1 minute chart. But I like to see levels. I like to see levels tagged, and I like to see the Q3 around that time. Okay. So there's a couple spots where there was some really great like Q3 entries. Okay. Low of the day. Previous Monday high. We get a Q3 reversal, tags the level, and then back out of there. Okay. So within quarter three, we get this level tagged, and we get a nice setup, and then it reverses away, it pivots away. Okay. Remember we talked about this was where price tagged the previous 6 a.m. open. Okay. Again, same thing. in the Q3 reversal zone, it tags the 6 p.m. open, I'm sorry, 6 a.m. open in the 6 a.m. candle and reverses away, pivots away. Okay, these are like these are high confluenced areas because it's multiple systems aligning. I I like using the structure of the quarterly, and I like using, like I said, I like using Q3 reversals when they hit specific levels. So I'll pop this on and off when we're getting near a level, and if it lines up in the Q3, then it just gives me that much more confidence to be in that trade, and I can size up more. I used to trade 5 minute exclusively, and because I like how the quarterly plays out better on the 1 minute, and I can watch price action a little bit better on the 1 minute around some of these levels, I've been actually trading the 1 minute a lot more. I think all the like the TMSO, I think those are great too. Like when you see price, um, like not tag it. I mean, look at all the way back and comes back and tags TMSO, and you can look for price to react around these levels. There's so much. I feel like most of you have gone through like JD's mentorship with the quarterly and all the ways he trades. There's some really great confluence between like all his mentorship stuff and then these levels. It's just like another layer of confluence added. So yeah, there's really great stuff with this quarterly. So that's why I've been studying it and back testing it along with the levels. And what I've noticed is when Q3 and these levels are tagged, it's like a very powerful deal. Okay, so it just gives me that much more confidence to like really size up my trade and capture it more. I've averaged up into max contracts before when I know it's heading for a level that I'm highly confident in. I like Asia session, New York Open. I'm Pacific Standard Time, so like as London is beginning, like that's my bedtime. I've stayed up through the night and it's just like my brain's cooked. And then if I have a bad night, you know what I mean? Then like you're not really ready for New York Open and it's just all bad. So if I would have gotten down in here, part of my trade yesterday is I wanted to see a 50% move back down to this high. I didn't get it. So I actually had to re-enter my long. Okay, and so you can see that this like 50% level was pretty much at this previous high. I want to see price come down in here. So I took profit up here. I got in right here at that order block. I took profit up here and I was going to re-enter at 50% of this range. I never got it. Okay. Um, and then I went long again and I want to say I was targeting the bullish ATR level and now we're getting kind of late and it was just consolidating. It wasn't really like hammering it. Um, so I just took my winnings and I went to bed. And I was like, yeah, I'll get into a trade again. So then I got up early. I saw this level hold and I ended up getting in right here in this fair value gap. And I went long right here. And I was expecting this sort of action out of here. And then I took my profit at Monday high. I was done for the day and went about my day. If I can make money early, I prefer to do that because part of trading and the freedom of it is I don't want to sit at the charts for 8 hours every day because then it's like a 9 to 5 job again. And I want to use this for time freedom. Yeah, I've talked about adding. Okay, adding, I look for 50% retracements. Okay, so in the ranges, like let's say you got here, okay, 6 a.m. candle, you hit this 6 a.m. open, it's Q3, you get into a nice long right here. Where are we adding? We're adding when we get 50% retracements. Okay, remember we said it failed to do that right there? Okay, where's our next range? Okay, 50% retracement. This is where we're averaging up because if price is just going to reach and tap 50% or barely into discount, that means it wants to meet an objective much higher. Okay, AUP. So as we're adding, we're not adding at the highs, we're adding at 50% retracements so that our initial entries aren't getting bumped up as high because we don't want to bump them up high enough to where these 50% retracements bring us to break even. We still want our trades, even though they're going to get bumped up, we want them to stay below 50% in case we do get like a OTE entry or a rebalance of a range. Okay, kind of like this right here. Okay, this would be more like if I took this initial range, okay, price breaks out of it, but it immediately closes back in it. And this is a deep retracement. Okay, look what we get. We get the 0.79 retracement on this. So we don't want to add where it's like going to bring us to break even at the 50% because then if we get a deep retracement, now we're back into drawdown. No, I've just been trading for 4 years, and I know that when price is in a hurry, it's going to either tag 50% and keep moving because it has a different objective. I mean, you can go back test this. It's basically like literal like the basics of price delivery, right? As price moves into a premium and takes something out, they offload orders, they bring it back into a discount, whether it's just in below 50% or it's a deeper retracement. It depends. Depends on what kind of market we're in. Are we in a consolidated market or are we in a market that's trending somewhere? If it's trending somewhere, then we're looking at 50% retracements. If we're in consolidative, and there's times of the day where it's consolidative, a lot of stuff just gets rebalanced along the way. That's high resistance price action. Um, yeah, I set them just above break even, but I let the trade breathe. Um, this initial short, I didn't let it breathe, and I talked about that yesterday when I was live. Here's my gaps. Okay. 5 minute. Where are we at? Whoops. Okay. 5 minute price action. After we like rebalance this area, I accidentally moved my price to here. And I was kind of like talking and not paying attention. I got stopped out with this candle and then it went away. Okay, but we were looking at this 5 minute candle created a wick. We go up. Let's take off these levels so we can see. Let's take off this so we can see. This is my thesis for short. We ran the previous day high. We create a massive wick that wicks away from a Monday level on a Monday. Price fails to move above 50% of the wick, holding it in place. We get two up candles. We get a set of down close candles. This becomes an order block. and I just moved my stop into profit too soon, and it just kind of held a couple 5-minute candles there before it dumped. Um, but I wanted the gap fill because I initially got in like right here. I wanted to get above the gap, and but then I set my stop like right here. I mean, it just wicked me out. And then we get a nice push down to that Monday high, rebalancing this area, taking out the equal lows, rebalancing this set of price action, this cycle of price. So sometimes what I should have done is this should have been my stop. I was just kind of being like, I don't really want to take any kind of drawdown or loss on mine, so I set it immediately just above break even, which is my fault for not letting the trade breathe. Technically, enter stop at this high because we don't want to see this high ran. After this set of price action, this high should not get ran. It should go look for its objective first. All right, what else you guys got? Let me look back up in the chat. See, Stephen, again, the 4-hour levels, when we're in an area that's kind of consolidated, you kind of got to look at price action on a certain, like with a certain lens. And what I mean by that is like I look at it because I study a lot of ICT stuff. So there's a lot of things that I look at from that perspective. Okay. And what I mean by that is like this previous low might be an area for price to reject. Well, this is a 10 a.m. candle, and here's a 10 a.m. candle. So we run a previous day high, and this is where I'm looking back for this rejection. Okay. Yeah, there's a previous high here. We ran it and we don't close above it. And technically it rejects these two highs. And this is the previous day high. But this is where I'm looking back to. I'm looking at this structure in price over here. Yeah, all the relevant areas, right? So it could be a fair value gap. It could be inverse fair value gap. Like, I mean, even stuff like this where here's a big 10 a.m. candle and I inverse fair value gap it. Well, what do we get? This day we reject 50% of that. This day we move up into this 10 a.m. candle, but still price rejects 50% of that. We don't close into this inverse fair value gap. Here's our fair value gap. Here's our inverse fair value gap. So I just kind of look at like price action, like where big days are that's relevant. And I say, okay, let me see how price reacts around it. Like this right here has kind of multiple things. We have a 6 p.m. low. Okay, 6 a.m. runs at 6 p.m. low. We also have this 2 p.m. kind of volume imbalance, but this candle right here. Okay, so I could take this 2 p.m. candle and look at it like that and say, how is price reacting to this if we're kind of holding above it almost like an order block? Okay, well, as the 2 a.m. candle reaches down into it, what does it do? Here, well, here's 50%. Well, what's right around 50%? Oh, we have a previous day low right here. Oh, maybe we can turtle soup that. See how it's relevant? See how the times add up every time? But I'm using everything that I use is very logical around it. It's levels, it's what's around it. Okay, then we get this opening of 6 a.m. Here's 6 p.m. What does the 6 a.m. do? It taps the open of 6 p.m. Literally just comes back down here, taps this open, and where does it target? It targets another 6 p.m. high. Look at that. And what's around it? Oh, a new week opening gap. Oh, a fair value gap is right there. And what does it do? It just reaches for that fair value gap. Rejects it. 10 a.m. manipulates down back into what would be a potential order block, right? These candle bodies got swept by these candle bodies. We had a massive movement up, showing that this was very reactive. Okay, and then look at this little guy right over here. Let's just make this red so it makes it easy. Okay, we have this really small 10 a.m. inverse fair value gap. Oh my God, the 10 a.m. candle hits 50% of that. Super random. Okay, but what's around here? If this is a 4-hour order block, then yeah, when price jams up over here, what do we want to see? We want to see price come back down into this order block because we want to see it retest it one more time to grab orders. And so what do we have here? We have an inverse 10 a.m. fair value gap in an order block, and we have price moving down to this area. It's logical. But the timing of it, that's where this allows you to say, okay, if this candle hits this area at the same time frame in an order block, we should see a reversal from here. So you should be able to go long it right here, see price action around it. And what does it do? We have a 10 p.m. candle, and it just taps the high of that 10 p.m. candle within a 10 a.m. fair value gap. So I mean, there's definitely like some really good A plus setups. And when you look at market structure and the structure of price and then areas around that structure and measuring certain things out, like I'm measuring this because we had such a rejection. So like this is like an order block. This becomes like a what is it? We were just talking about a propulsion block. Okay, and then look what the price has done after it tagged it. Have we had any retracements back here? No. Boom, 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 boom. We're expanding out of this area. And then each level kind of matches, right? We want to put in when we're consolidating, we want to put in some false highs and lows, right? Because we need to engineer liquidity during an area of consolidation. So here's our first false low, and then we get price come all the way back. What is this? This is Friday, and this was a Tuesday. Okay, so 3 days later, we get price come down and run that low, and then expand out of this order block after running the low. Price fails to close below 50% of this candle. Any more questions on that? If you, I have like a few YouTube videos, and again, this is all stuff that you can like back test in your spare time. The indicators are there, and this is again, this is just stuff where when it all lines up, it just allows me to have a lot of confidence and confluence in the trade because stuff is lining up based off of time, day of the week, 4 hours are matching, all that kind of stuff. And when you get like 4 hour day of the week, like all this stuff matching, multiple ways of trading are all giving the same confluence, you can be confident in that trade. And that's when you should be able to size up a little more, because that's what we want to practice. We want to practice watching price and knowing when we should keep our leverage low. But we also want to be able to, at the same time, be able to watch price and say, oh, I'm comfortable leveraging up on this trade because of X, Y, and Z is all lining up and it looks really good. And I'm okay to take the risk on this because it should go in my favor. It's when we do the opposite that's when we kind of like we screw ourselves, right? When we shouldn't be leveraging up, we leverage up. When we should leverage up, we're not. So we can also fib the 4 hour chart. Okay, so if this is our last low, and this was our high, again, we didn't get the full 50% retracement. Price was in a hurry. And we're almost at 1, which 1 puts us pretty much at these highs right here. Okay, 2 puts us at up here. 1.5 right here. And so these can be levels that you look for price to be reactive around. Okay. And look for candle bodies. Do candle bodies hold certain levels? Okay, so maybe you go down to a 1 hour chart and see how candle bodies hold around this. Does it wick the highs, but then candle bodies are holding this? Does that mean that we're going to get some sort of retracement back? It's all practicing just reading price action. All right, if you guys don't have any more questions, then I'll wrap this up. Yeah, no problem. Yeah, I'll try to, like, on my days off, when I'm not at the fire station, I'll try to do these like daily reviews just so we can like keep talking over price action and going over the day. Because I really do think that like doing a daily review is good so that you can kind of see like how price is and like get a little bit of reading it and be like, oh, okay, now I know like what I should be looking for like certain levels and whatnot. And just building that skill of reading price action. And then, your forward testing is when you're doing it live. So, because that's the ultimate goal, right? Is to be able to read it. And there's times where I like second guess myself still, like with live price action, where I might move my stop too soon or whatever. And it's all repetition and practice. All right. Well, you guys have a good afternoon, and so I'll have a good day trading tomorrow. About 15 more minutes. All right. Thanks, everyone.